Phil Muscatello and FinPods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation. Shares for beginners. Weekend watch list.
G'day and welcome back to Shares for Beginners Weekend Watch List, where we take a close look at an individual company that you may wish to consider for your watch list. It's not a recommendation to buy, but a way for you to discover valuable information about investments in the ASX. Joining me today is John Campbell, Company Monitor with the Australian Shareholders Association, and we're talking Mineral Resources Limited, ASX code MIN. How are you, John?
I'm very well, thank you, Phil. Yes, we normally abbreviate it to MinRes.
MinRes. Okay, we'll call it MinRes. I just wanted to introduce you to the listeners in that you're a volunteer company monitor with the ASA. So you're the person that meets up with management and attends the AGM and recommends voting intentions for what will be coming up at annual general meetings. That's the case, isn't it?
That's the way it works. We have a pre-AGM meeting with most companies. Didn't work quite as smoothly as normally with MinRes. I'm not the normal monitor for MinRes, but he was unavailable for the duration because of being overseas to go and look at the Northern Lights. So I stepped in to look after it for him.
To begin with, tell us briefly about MinRes's activities.
Well, it's got four main areas, really. It has its iron ore operations, on which the focus is at present because of it's just in the process of developing this Onslow hub for iron ore from northwestern WA. It has other operations involving iron ore in the Pilbara, further north at Port Hedland, and it had operations out in the goldfields. I think they're in the process of closing those down at present. They were exporting iron ore out of the port of Esperance in the south coast. But the Pilbara ore goes out through Port Hedland, and they call it Ashburton Shower, is the shower that Onslow is in. That ore goes out through a process through the Onslow area. There are other activities. They have a subsidiary called CSI, which is involved in providing mining services to the various mining companies up mainly in the Pilbara and the goldfields, probably elsewhere as well. I think I read that they had a contract in the eastern states. And whilst the Onslow project has been going, they've also had a separate area for construction and engineering, a business involved in constructing the facilities for Onslow. They also have a lithium operation, which is both in the Pilbara and in the goldfields. They have three mines, one of which is being put on care and maintenance, Bald Hill. And they had and still have an oil and gas activity, which was in the Perth Basin mainly. They've sold parts of that activity to Gina Rinehart relatively recently. And finally, they operate an airline as well for transporting their shift workers from their location to the worksite. So they're a truly broadly based group. They've got a lot of different and diverse operations.
Now, this company has been an incredible performer for quite a long period of time, hasn't it? The shareholder return has been pretty good, hasn't it?
Yes, it listed back in 2006. I think the shares immediately after listing were $1.15. They got to a high of about $89 in January 23, I think it was. And they're back down to about $36 at present, but still that's a 3,600 return or 360 return, I'm not sure.
We're getting too used to using our calculators these days, aren't we?
Yes. Well, a lot of very happy shareholders that have held the shares for a long time. The ones that have bought it more recently are not so happy, of course.
Now, of course, this has always been seen to be a founder-led company. Chris Ellison has been the managing director and founder, and he is seen as being someone who has done a lot to provide this shareholder return, hasn't he?
Yes, indeed. And I guess, like many founder-led companies, he's found it difficult to transition from a family entity to a large ASX 200 listed company. It's been a difficult task for him. He's wanted to continue the favourable aspects of running a small business, but that's come at some cost in terms of the difficulties that have emerged with related party transactions, employment of relatives, some of the deals that have been done. I think those sort of issues have highlighted a failure of governance by the board to stop that sort of thing happening at an early stage, and it's allowed it to continue. And then there's been a suppression of that information, that there's been only minimal disclosure of it. And this most recent revelation of secret profits before the public listing of MinRes has obviously brought about some problems for the company and for him.
So this is the nature of the problems that were facing the board and shareholders at the recent AGM. You attended the AGM. What was the mood like?
It was a very split AGM, I think. I'm not sure what the percentages were, but there was one group of very vocal shareholders who were very supportive of Chris Ellison. I wouldn't be surprised if in the early days he used to reward his contractors with shares rather than cash in payment for their services. And if that's the case, they'd have probably done a very, very good deal from being shareholders of MinRes through the years. I don't know whether they were the ones or whether it may have been other shareholders, but at any rate, there was a very significant body of support for Chris Ellison that gave his address, as managing director's address, a very long and deep applause after it. We were sitting in the front, and so it was difficult to tell whether they were the majority or just a noisy minority, but there were certainly enough of them to give him very significant support.
The association takes governance very seriously, doesn't it? And for the association, many members want to be ensured that they're investing in companies that have good corporate governance and are basically squeaky clean. What has been your feelings on this point?
Well, what I concentrate on perhaps is the delay in the board revealing this information about the prospectus, the secret profits made at the time of initial listing. The delay, which has been as long as 2.5 years, the board's known about this and has kept quiet on it. I'm not sure to what extent they knew about it to start with, but I tried to find that out at the meeting. I asked whether they told the auditors and that when they first knew about it, which would have been the June 22 audit, and whether the auditors were comfortable about the non-disclosure and why would that be so. But I didn't get any answers out of either the chair or the auditors on those sort of issues. So I guess to be expected, given the nature of what's happened and the risk of litigation.
So you mentioned that how emotional Chris Ellison was giving his address. Did he actually get down on bended knee and beg forgiveness from shareholders?
Well, not physically, but he had to stop for quite a few seconds to sort of regain his composure before he can continue. And he certainly did make it very clear that he felt very deeply about the error of his ways and his regret for having engaged in that conduct. He then launched into his address about the current state of affairs at MinRes and the future, and was very bullish and positive, and that gave rise to the applause at the end of his speech.
Yeah, he seems to be quite a charismatic character, doesn't he? That commands a lot of loyalty amongst shareholders.
Well, certainly, I think that he's done very well for those early shareholders, yes.
So this is not just the only issue that has arisen with the company. Tell us about the issues with capital expenditure and capital management.
Well, yes, I mean, they spent $4 billion. The group spent $4 billion last year on capital expenditure. And a very large percentage of that would have gone on Onslow, although obviously there was quite major expenditure on the lithium mines as well and acquisitions in that area. So I think overall, they've probably gone a bit further than they intended in terms of commitment of funds. And given the fact they've still got quite a large expenditure in the current financial year on Onslow, and they've contracted to buy, at least I'm not sure if they contracted to buy, but they intend to buy 7 of these huge transshippers. They carry 20,000 tons of iron ore. They take the iron ore from the shoreline at Onslow out to the deep water where the bulk carriers are moored about 40 kilometers offshore. And each of these transshippers is to cost about $100 million each. They had 2 of them going at balance date. They have a third going now, and the other 4 are on the way. So to get to their 35 million tons per annum of iron ore export, my calculation is that they need 5 transshipper journeys a day taking ore out to the bulk carrier or bulk carriers moored offshore there. And that's quite a major commitment. That's also a very significant volume of traffic down their haul road, which is 150 kilometers long. They've sold half of that, or 49% of it, to a financing organization in return for a fee per ton transported. which will add to their overheads quite significantly. It's $8 a ton, the fee that they've got to pay. And I think 49% of that will go. I'm not sure if $8 goes to the third party. I think it does. So, that's probably make it about, I don't know. My mental arithmetic's not good, but it's an awful lot of overhead to add to the cost of the project to pay the haulage.
Are you picking shares on gut instinct? Buying on press tips or rumours? Do you struggle to find the time to keep up with the research and analysis that goes into evaluating potential stocks? Stockopedia are pleased to offer a special deal to listeners of this podcast, a 14-day free trial and a 10% discount on the first year of membership. Sign up now at y.stockopedia.com/SFB. There's no better time to access the most comprehensive, easy-to-use investing toolbox for DIY share investors. 10% off, 14-day free trial and a 30-day money-back guarantee. That's y.stockopedia.com/SFB. Do you think this is going to have a significant impact on the bottom line going forward?
I guess that the punt they're taking is on the iron ore price. If the iron ore price holds up at the sort of current levels, I'm sure they've got that right, that they can make a good cash flow out of that and support the operation. And that they're talking about a very long-running operation. I noticed that, I think it was Rio Tinto the other day saying in their strategy meeting that they expected Indian demand eventually to take over from Chinese demand, but Chinese demand to keep going for another 20, 30 years or something, supporting iron ore prices. Well, if they're right, and if Ellison is right at MinRes, then they have a big stake in a profitable operation. But it is all critical about what the overheads come out at and what the cost per ton comes out at, and because they'd have to be the most expensive operation exporting iron ore from Australia. And other aspects of it are a bit worrying too. The reclaimers inside the transshippers are going to be diesel, and they're going to have to lift 35 million tons of iron ore from the deck of from the hold of the transshipper up to the holds on the bulk carrier, which would be quite a significant lift in terms of diesel emissions that would come from doing that.
So moving on to the voting and the voting intentions, the association decided to vote against the adoption of the remuneration report, which is a big deal. It's a first strike. Why did the association decide on this position?
We always look at the remuneration report in isolation, really, from the results of the year. I don't think a lot of other investors do. I think that the institutional investors tend to look at the remuneration report vote as being a vote on the management for the year and whether they're happy with it or not. And when we see a vote of 75% against the remuneration report, that indicates to me that the institutions aren't necessarily unhappy with the remuneration structure, but are unhappy with the consequences of management's actions. We don't take that attitude usually as ASA. We tend to look at it just on the facts, and we were unhappy with a number of aspects and have been for a number of years. We've voted against the remuneration report last year, I think. There are 4 aspects of it that we don't like. One is the basis for calculating the long-term incentive. They use return on investment. We prefer to see shareholder return, total shareholder return used, at least one of the measures. The transparency of the yardsticks for the short-term incentive also are not very clear, that there's no straight disclosure of what they are and how they're calculated. And also board discretion is said to come into this. And I noticed that all of the general manager level executives got the same rating in their short-term investment, which implies to me that there's a degree of undisclosed board discretion being used in calculating the answer. And finally, they gave handouts for retention, just simply for remaining employees, to the managing director and the chief financial officer. And to be honest, I think there's no justification for that, whatever. So we voted against it on those bases. That's basically what it boils down to.
So how has this left Chris Ellison? What kind of position does this leave him in?
The remuneration vote is advisory. It has no consequence, except that if they have a strike against the remuneration report 2 years running, they have to have a ballot for the board. But I think Mr. Ellison's terms with the board are that he will relinquish management within 18 months. So his job is being, they're looking for a replacement for him, and his job is sacrificed to these past transgressions.
And he's foregone quite a bit of salary and bonuses as well, hasn't he?
Yes, very strongly. I mean, all his current entitlements to share rights through long-term and short-term incentive, which are evaluated at, I think, about $6 million, have been forfeited. And he's promised to repay the secret profit he made of $4 million approximately. And he's also promised to make an annual donation to charity of $1 million from personal funds for the next 5 years. So very heavy financial consequences.
So looking forward, what are your feelings and thoughts about this company, about MinRes, without Ellison at the helm?
All companies that are founder-led have got to make a transition at some point in time, and probably now is as good as any for that transition to occur. So I don't think his departure is, obviously there are emotional issues for a number of people in that area, but in terms of the financial future of MinRes, I don't think it will have a major impact. The major impact comes from what happens with the iron ore price and lithium prices to an extent as well.
You referred briefly to incentives being tied to total shareholder return, or TSR. Just speak to me a little bit more about that and why that is part of the association's position.
Well, when we look at remuneration overall, we like to see the long-term incentive tied in with what shareholders regard as long-term. And that tends to be a lot longer than the term that's usually applied in the incentive calculation. The best incentive arrangements are generally 4 years or longer, and some of them have a retention beyond that of the rights that they're not allowed to be traded for a period after that. The more common and worse feature is 3 years of results computing into the long-term incentive. That happens in a lot of companies. I think this one is 4 years, but I stand to be corrected. I can't remember. The reason we want to see total shareholder reward be a major feature of the calculation is that we like to see it aligned with what shareholders have achieved during that time. And we're not looking to reward speculators and short-term shareholders. We're looking at the long-term shareholder as being the one that deserves recognition in calculating the amount of the award.
So in terms of companies like this that are price takers, really the future all depends on the price of a single or maybe two commodities, doesn't it?
Yes, well, certainly this one, they started off with the division that does mining services being the major part of the company. Their expansion into owning mines and operating mines is kind of more recently. So they always have that to fall back on. That is the core of their business, if you like, but it's only a small part of what they've got at risk now because of the amount that they've invested in both lithium and iron ore.
Fantastic. John Campbell, thank you very much for joining me today on this episode.
No problem. A pleasure.
Thanks for listening to Shares for Beginners. You can find more at sharesforbeginners.com. If you enjoy listening, please take a moment to rate or review in your podcast player, or tell a friend who might want to learn more about investing for their future.